Hello and welcome to Money Control. Well, my name is Shadha Janand, and today we have a very special show on markets, economy, and budget 2021. Well, it was a volatile year. If you look at the year 2021, it has been a volatile year for Indian markets. We saw Nifty 50, hitting a three-year low back in the month of March. But in the initial bit of phases, in the month of January, we saw record highs as well coming in. And now Nifty 50 has sort of rallied more than 70% to hit yet another record high. Now it is actually moving towards the 14,000 level. On the Sensex, we've seen 46,000. So it has been a fabulous year for Indian markets with double-digit gains both on Sensex as well as on the Nifty. Foreign institutional investors have, poured in more than 1 lakh kind of 1 lakh crore kind of money into the Indian markets. Apart from that, DIs have been the net sellers. In fact, they pulled out more than 20,000 odd crores from the Indian market so far in the year 2020. The big headline number is the primary market. In fact, we've seen more than 31,000 crores coming in or raised in the primary market so far in the year 2020, with around about 16 main board IPOs coming in or hitting the markets. Now, for the year 2021, the crucial points to discuss would be what will happen with the budget, how will be the investment behavior, will the rally continue, and what would be the sectors, or you could say the themes, which one can look at. Well, for that, we would like to invite Jaideep Hansraj, who is MD and CEO of Kotak Securities, Somnath Mukherjee, who is a managing partner and CIO at ASK Wealth Advisors, as well as Vikas M. Sachdeva, who is CEO at MK Investment Managers Limited. First, a brief on the year 2020. In fact, it was a volatile year. It was an unpredictable year for Indian investors as well, because we saw record highs in the month of January, and then we went to three-year low, and then again we are back to record highs again, which nobody would have thought, amid the outbreak of COVID-19 virus, which we are still in the midst of it. Now, if you look at the Sensex and Nifty, we've crossed 46,000 on the Sensex. Nifty 50 is gladly, running away towards 14,000 levels. So that is something which has caught many investors off guard. And in fact, most experts have saying that it is the most hated rally that we have seen, in the year, because it never gave a chance to anyone to sort of, jump in, because the moment you thought of investing it, it just goes up and up and up. And in fact, the last week as well, we saw mild correction, but then again, bulls are back on street. So at this point in time, the only one which is unemployed are the bears. But definitely to start with, we have Somnath Mukherjee. Well, Somnath, I wanted to quickly come on to you and talk about the economy. We've seen economic fundamentals improving over the period of time, and as usual, the D Street discounts everything in advance, and we've seen that happening as well. And you said that India's slowdown was the worst or the sharpest in the world, and the COVID stats still higher, but the physical backdrop is still one of the lowest. So does that mean that we are attractive in terms of attracting foreign investment, or as an investment destination?
What I had said was that certainly India's fiscal boost as a counter to COVID-19 related slowdown has been amongst the smallest in the world. If you look at
Right.
whether it's the developed world, whether it's the emerging markets, whichever way you slice and dice the data, the general level of backstop from the fisc that we've got in India is one of the more modest ones globally. Uh, and we have also been subject to probably the strictest lockdown for at least 3 4 months when it was there, and hence
Absolutely.
the impact on incomes and demand, aggregate demand, has been the sharpest in India, which is what gets shown up in quarterly GDP numbers as well. So therefore, it is a fact that what we need to be careful about is how much of that demand that got taken out was permanent and how much of that demand is reversible. Uh, the fiscal backstop is required to ensure that as little of that demand destruction is permanent in nature. India also happens to be a relatively low income country, and as a result, a very large segment of the consumer base is vulnerable to these kind of shocks. And when once they get um, trigger down into a below poverty line, into that sort of levels, it takes a lot more to bring them back up.
Yeah.
And therefore, a fiscal boost, which is much larger than what we have today, is
Mhm.
certainly required. High frequency indicators as of now certainly have picked up from the lows that we have seen earlier in the year. But what we need to do is to be a little bit careful about how we analyze the data, simply because a lot of things have gotten put together at the same time. Festive season, pent up demand, the fact that 5 6 months there was virtually no action in the marketplace that was happening. So all of it has got clubbed together in the last probably 2 or 3 months. And once we get on to the next few months, we will get to know what's the steady state equilibrium that we are arriving at. Now, that is one part. So, is a larger fiscal backstop required for India? 100%.
Yeah. Yeah.
Uh, the second question was, is India an attractive destination for investors, including foreign investors? Several reasons that is indeed the case. One is the global macro backdrop is extremely propitious for equities,
True.
and not just equities, but for risk assets.
Mhm.
Global interest rates over something like 60 70% of the world weighted by GDP today is zero lower bound.
Zero.
One third of all sovereign bonds outstanding is negative interest rates. So there is an extremely high level
Mhm.
of global money supply that is available, which is chasing returns, which is chasing yields. And India happens to be one of the very few countries in the world that offers an enormous diversity
Mhm.
of investment opportunities. Right from consumer to tech to banking. Very few countries, at least in the emerging markets parlance, have the sort of diversity and breadth of opportunity that India offers. Add in global risk appetite to the diversity of opportunity that India offers, and it makes for a very very good case. Over the last 25 30 years, we've seen this time and time again. Whenever global risk appetite is high, India is an outsized beneficiary of it, precisely
Right.
because of this reason. Because we are
Mhm.
a very outsized or outlier kind of emerging market that's around. And therefore, foreign investment in general in risk assets remains pretty strong, and India will continue to remain a beneficiary of that. So I think these are two different points
Mhm.
on whether a larger fiscal backstop is required and whether there will be foreigners who will be interested in the India story going forward. Both are true.
Well, I would like to bring in Mr. Hansraj. We have seen a dichotomy when it comes to markets touching record highs and the macros, which have also started showing signs of green shoots. But with uncertainty around COVID-19, well, do you think the rally has legs? And if I'm not wrong, Kotak Securities see a Nifty 50 target kind of at 13,500 in the year 2021. Do you see a mean reversion happening in the coming year?
The reason where we put out a 13,500 target for December of or calendar 21 is predominantly based on the fact that valuations look stretched.
Mhm.
But having said that, I said that in a talk which I was having last week as well, that it's don't look at the Nifty target as a pure Nifty target and say that I'm not going to make any money in the equity markets for the whole of calendar 21.
Right.
Having said that, the Nifty has delivered 80% return in the last 8.5, 9 months now. From a low of 7,500, you're at whatever, 13,500, give or take, closer to 14,000, give or take. So the fact that Nifty has given significant returns over the last 6 to 9 months, yes, I agree with the fact that people are feeling left out and how. I mean, all those
Yeah.
WhatsApp jokes which keep floating around that uh, people are waiting as desperately for a COVID vaccine as they are for the market to correct.
To
But
correct. Yeah.
I believe that there are going to be sectors and there are going to be sectors which will give very decent returns for investors. I think the pure churn of investments from sector A to sector B is going to happen, and if uh, the investor is sharp today and catches that, I think one will clearly see uh, returns being made in the stock market, maybe not from a benchmarked return point.
The year 2020 indeed has been a volatile year for investors. Uh, and it has been all about innovation of products that we have seen in the year 2020. That means how fund managers have come up with a lot of products to beat the volatility and take the right bets at the right time. So, what is your unique investment strategy to deal with volatility, and any new products which you have introduced in the year so far?
In terms of volatility, yes, you are going to see reason catch up with enthusiasm as we go along. There are going to be a lot more data points which will temper the rally. But by and large, I think if one tends to be a little bit more, having a little bit longer vision, even a medium-term vision of around a year and a half, you will find that things look very good. The government has announced a series of measures. Primary one which is being talked about right now is the PLI. I don't want to mention the agricultural bill because I don't know where I'll go with that. But in terms of PLI, for sure, I think that is attracting a lot of attention. At our end, what we've done is we've tried to cut the clutter, keep away from the noise, and just focus on one very simple thing, which is quality. And we've actually defined quality. It's not a vague pie in the sky sort of a concept. It's either quality of business. You get into a business which has been delivering high ROCEs and the predictability of growth is very good. We call it the Smart Alpha framework. Or alternatively, if you do not have the quality of business the way you want to see it right now, then focus on the quality of management. And that has been a stellar sort of revelation for us. We've got a proprietary model called eQual, in which we are able to measure a lot of factors like management integrity and capability, etc. In fact, this is probably the only defined governance model in the country. The ESG part, which we talk about, G has been very well calibrated. That has enabled us to just focus very, very intensely on quality. And that is what we want to do. You cannot look at all the news coming in and start to react. So you just focus on one factor, which is quality, whether it's quality of management or quality of business. And it has yielded very good results for us.
Right, focus on quality. I think that will be the primary focus, as we enter the year 2021 as well. Because if you look at the 2020, there are a lot of stocks which have actually, because of the liquidity tide, they are trading at high or hefty P multiple. So it's very hard for actually someone to, pick a stock at this point in time, because everyone has given a phenomenal return, especially in the small and the mid cap space. Here I would like to bring in Mr. Hansraj as well. The big trend, I think that has been the you could say the standout trend that we have seen in the year 2020, that we have seen addition of a lot of new investors coming in, a lot of you could say the fresh blood entering the stock market. And if I'm not wrong, you've also added more than a lakh clients to the total, and which have taken the tally to around about 6.5 lakh active clients. So do you see the trend to continue in the coming years as well? And here I would like to put a disclaimer as well, because yes, these new breed of investors might be more informed than the previous one which we have seen entering the markets. Have you seen that kind of trend or change in the mindset, and they're more prepared for the volatility? What has been your experience in that?
Simply, I can't say whether they're used to the volatility or not, because I don't think because a lot of these individuals have come in post that horrible month of
March.
So,
Yes.
I wouldn't be able to hazard an intelligent guess or a bit that whether they're in it for stomaching the volatility or not.
Right.
But let me tell you, the kind of money which these guys have made is not funny. I mean, they've really made very decent money. I think it got triggered off with the fact that work from home or sitting at home in the first couple of months, not knowing what to do, and it started off by starting to trade. But after that, it's been a far more serious set of uh, uh, people who've been there. This is clearly the millennials who've come into the market, which I've seen. When I do back testing of the set of clients who've come into our system, I've seen people come in from tier 2, tier 3, tier 4 towns.
Right.
I've seen them from I mean, I'm not saying that people have not come in from the Bombays and the Delhis and the Bangalores of the world, but
No, no,
but
two and tier
uh,
three cities have, yeah.
yeah, a Raipur or a I mean, Pune, Hyderabad has been really big for us. So I think this trend, to answer your question, I think my gut is it will continue. The total number of demat accounts which have been opened, the total number of broking accounts which have been opened in fiscal 21
Mhm.
or the last 8 months has been closer to about
Right.
7.5 million accounts. The month of November added close to a million accounts. So it's
Yeah,
the run rate currently which is going is close to a million accounts a month.
a million accounts a
And
month. Wow.
I think this trend will continue.
Considering the fact that it was a lockdown year, have you seen any change in the investment behavior? That means considering strong rally which we've seen in April, are HNIs moving towards safe haven? Because Nifty 50 has sort of rallied, or Sensex have sort of rallied more than 70% from the lows, and now we are staring at uncharted territory and crucial resistance levels. So, what has been the trend so far, or what are your feedback that you're getting from your clients?
I've always believed that HNIs and ultra HNIs know far more than what they display. I think they're one of the savviest segments out there. And I think what happened is in the initial stages when they realized that the markets were going up, a lot of them actually jumped in and then quite a lot of money. Equally, I think when the Nifty crossed 11,500 levels, a lot of people actually moved out and tried to look for safe havens. And
Right.
that is the reason why there's this FOMO when the markets have moved out. But like I said, they went back into the primary markets and you see the oversubscription happening there.
Mhm.
To my mind, I think HNI behavior has been very predictable. A, because of their own domain knowledge, and B, because of the advisors they have. I think whether it's asset allocation, or other aspects like investing globally, taking advantage of other asset classes. For example, I see a lot of HNIs moving to gold right now.
Right.
Okay, over the last few weeks, when there's been this new strain and resurgence of cases, I've seen some money moving into gold. So
True.
I think they're far more savvy. What has actually surprised me is this segment one level below the HNI, which is between the MNI and the HNI segment,
Okay.
wherein they've displayed a lot of alacrity, a lot of agility, and they moved into markets. I think some of the reasons Jaideep has just mentioned, they had time, they had the ability to look at things. But more importantly, I think they've capitalized on the information which has been coming in.
Right.
So you normally tend to believe that retail or M&Is will come in and they will come in at the wrong time, they will go out at the wrong time, and they tend to get slaughtered, etc., etc. I would tend to believe that this new bunch of people who've come in,
Mhm.
they're far more agile and informed.
Right.
I'm not saying that they may not step in the wrong direction, but they're far more agile than what we give them credit for. This reflects in opening up of demat accounts. This reflects in terms of moving into platforms like Small Case, for example. A lot of money is going there.
A lot of
Money
money.
moving into alternates. People like us are getting money. So I think it's fairly encouraging what we're seeing out there right now.
We are talking about new trends, and so what is your take on the markets for the year 21, and do you think the way investors manage wealth in the coming year will change, because in the year 2020 we have seen a lot of things change. A lot of people are buying insurance as well, which have never bought before, or they've not even thought about, because a lot of people I know, they were buying insurance. For a couple of my friends, I think, let's move from the company level insurance to a more personal health insurance. So that is something which is changing. People also diversifying towards safe haven apart from the equity exposure. That means you have certain corpus in equity, but they want to keep certain corpus with fixed income, as well as certain FDs as well. So will that behavior also reflected in the year 2021 as well?
I don't think asset allocation is that big
Right.
an issue in India. People are already fairly well diversified. There is a significant amount of savings that's in bank
Mhm.
deposits, that's in several state-backed investment programs, whether it is LIC or PPF or stuff like that. So I don't see asset allocation being a challenge. The bigger challenge is whether people get used to the volatility, and the new breed of customers who've come in today, as
Right.
Jaideep was mentioning, as Vikas was mentioning, they have seen the first ride of the cycle, which is the up.
Right.
Now, when the inevitable down comes at some stage, whether they will remain in the market or whether
Right.
they'll behave like everybody else, so 70-80% of them may get cheesed off the market, and the balance who can manage the volatility will remain. So that will remain. But what has certainly happened is that there is an increased acceptance of volatility as a friend rather than volatility as an enemy. Um, and several strategies, product constructs are coming in that
Mhm.
tries to reflect that view. And that's very crucial for investors also to imbibe that volatility is a friend of the investor, and it is up to investors to take maximum benefit out of higher volatility rather than being scared out of that. From a macro perspective, year 21 headline numbers should all look very good.
Right.
Sans a sudden outbreak of a different strain, which puts everything out of the equation.
Right.
Headline numbers should be very good, but what we need to look for is beyond.
Right.
Whether year 22, 23, what is
Mhm.
the steady state growth that we as a country can settle down at? Our take is we will grow slower from what we have seen in the last 25, 30 years, certainly post 91. Our steady
Right.
state growth will become slower in the next 5, 6, 7 years. However, it will be steadier, and it will still be a lot above most other countries in the world, most other major economies in the world. Um,
Mhm.
uh, Jaideep mentioned PLI, so
Right.
that is an interesting policy intervention that is going on. There will be certain amount of sector rotation that happens. We've
Right.
seen the consumers and some of the defensive really run up in the
Mhm.
peak of the COVID season,
Right.
but there will be rotation into the cyclicals, and partly on account of PLI as well. And in the next 3, 4, 5 years, uh, at at the very least, we should see some beginning of growth of manufacturing in India. I mean, despite
Mhm.
a lot of effort over the last 2, 3 decades, manufacturing has remained stuck again as in terms of contribution to GDP. Um, with PLI and some of the other stuff, the general sense, the global sense of protectionism that is sweeping the world today,
Right.
there should be finally a pickup in Indian manufacturing.
Finance Minister Nirmala Sitharaman promised to be a vibrant one. What are your expectations? Well, I'll start with Mr. Mukherjee. So, what are your expectations from the budget, and what will share markets?
I don't expect, expectation of the budget is one of those old chestnuts. It's no use. All of us are
Absolutely.
price takers in the policy market, not price makers.
Absolutely.
But
Absolutely.
certainly, one thing that most market participants, we certainly will be keeping an eye out for is whether we finally get a substantial, large fiscal intervention in place. It is extremely crucial. It is, to use Latin, sine qua non for us to ensure that uh, a lot of the demand that has been destroyed has not been permanently destroyed, and
Right.
it is reversed out. Because if it's too late, then we will take a long time. Remember, we took an enormously long period of time to move 200, 300 million people out of poverty. It took 2.5, 3 decades of very high
Mhm.
growth before
Right.
the sticky nature of Indian poverty back of that could be broken.
Right.
Um, we should ensure that we don't slip back, because that's probably the biggest risk to the country from an economy perspective.
Yes, I'll be eagerly waiting for some kind of a fiscal stimulus. Uh, I'll just add one more thing to this. I think September 2019, which was just about year and a quarter back now, was one of the biggest fiscal stimuli which was given uh, by the government when corporate taxes were cut. And, that was not on budget day. That was somewhere in September of
Yes.
2019. So
Yes.
I come from that belief that if we have to do something, then we'll do it at any point of time. Budget is just one day when you're balancing your or matching your uh, accounts.
So, Mr. Hansraj expects a certain stimulus coming in that could probably cheer markets. Vikas, what are your expectations on that?
But
Yeah.
specifically, two things. If I have to pinpoint the budget as an inflection point, which the finance minister has to deliver on, one is spend on infrastructure needs to increase.
Right.
That is something the government has to step up. Private sector will take a lot of time to increase the capex, so government has to step up. And
Right.
specifically, a personal ask from my side, from the finance minister, is improving the infrastructure on the medical front. I think COVID has actually shown not just us, but the entire world, but primarily us, how woefully inadequate our infrastructure is. We've got wonderful people, but not enough infrastructure. So a series of incentives and initiatives which can propel the improvement of medical infrastructure. This could be the time, and this should be the time the government should press the button.
A lot of requests coming in, for the finance minister. Yes, a certain degree of infrastructure spends that needs to be done on medical front as well, and in the infrastructure space as well. A fiscal stimulus is something which will definitely cheer markets and experts. And 2021 promises to be a good year for Indian markets. Yes, the headline numbers will improve. The economy is likely to show some signs of stability. Corporate earnings should bounce back. I think with that note, I would like to thank everyone for being part of this show. Thank you, Jaideep Hansraj. Thank you, Somnath Mukherjee. And thank you, Vikas M. Sachdeva, for being part of show on markets and economy. But do stay logged on to moneycontrol.com for more on news, business, and economy. Thank you so much for your time, everyone.